Good morning, everybody. We have a sharply higher trade in the grain markets here early on Thursday morning. It is 6:30 a.m. Central Time. March corn futures up 8.5 cents at 530 and a half. March soybeans are up 14 and three quarters at 1384. We have March Chicago wheat up 5.5 cents at 673 and a quarter. March Kansas City wheat is up 8.5 cents at 645 and a half. March spring wheat up 2.5 at 640. So the row crop markets have already erased just about all of yesterday's losses, definitely in the corn, and I think so in the soybeans also. So fairly impressive performance here. EIA will release weekly ethanol data later this morning. Traders expect ethanol production around 938,000 barrels per day. That would be down marginally from 941 last week. Ethanol stocks are expected to build again. We're looking for a number near 23.9 million barrels, which would be up from 23.7 last week. Production margins for ethanol plants around the country remain generally poor. Gasoline demand is running 11% below last year's pace on average over the last 4 weeks. So we still have a major problem here with ethanol. And as I've said before, you would never know by looking at the corn market that the single biggest segment of demand for U.S. corn is in serious trouble. But it is. The margins are bad, and I don't expect a massive recovery here anytime soon. This is something that's going to take a while. Farmers in Argentina have drastically increased forward corn sales amid fear of government restrictions. Now, we know that the government in Argentina attempted and failed to suspend or restrict corn exports recently, but still last week, farmers increased forward sales of corn drastically. They sold over 1 million metric tons of corn in the week from January 7th through the 13th. That's up like 220% versus the same period last year. Higher prices, also a contributing factor to those more aggressive sales. This is a quote from one farmer in Argentina. He said, "Corn has an excellent price, and we are checking expected yields, which are looking good. Given these two variables, plus all the talk about government closing exports, we are selling a good proportion of our new crop." So these government intervention stories continue to circulate in one way or the other. The other story is in Russia. There were some headlines from the Russian government just overnight. They said, I think what they said is that for the moment, they feel as if the government measures taken, which is the wheat export tax, is sufficient in regard to stabilizing food prices. So the Russia thing, the Argentina thing, we're also hearing about Ukraine potentially limiting corn exports. This all goes back to higher prices, COVID, food security, that sort of thing. The things that concern me, especially in the case of wheat with Russia, is that the governments could reverse these policies at any point, and that's a deal that could send the market lower very quickly. It's very, very tricky to navigate this sort of stuff where the government gets involved and intervenes and disrupts exports. The U.S. stock market posted fresh all-time highs yesterday. The S&P 500, the Dow Jones, the Nasdaq all posted fresh highs yesterday. The S&P has now rallied 76% from its March low. Traders are betting on a lot of things here. An additional $1.9 trillion in government stimulus. I think that's probably all but a done deal. The details are what's lacking here. Vaccine hopes, strong corporate earnings, general improvement in economic conditions. I want to show you the S&P chart here on the screen because it's very impressive. This is the chart basically from December of last year, of 2019 through today. And you can see right here in March of 2020, that's basically where you had kind of like your panic low in regard to COVID. The market had fallen out of bed, had seen a sharp correction. It was around that same time when the market bottomed that Trump signed the first stimulus bill, and that reversed the course of a lot of markets. The stock market bottomed again. If you would have bought just any old S&P index fund in late March, you would have seen a return of 76% as of yesterday's close. So it's really phenomenal here. The stock market reversed and trended higher. The dollar reversed and began to trend lower when that first stimulus was signed, and commodity markets essentially bottomed. And I've talked about all this stuff before, but I thought it was maybe worth explaining again as the stock markets posted fresh highs yesterday. Remember, February grain options expire tomorrow. If you have any remaining positions there, make sure you take a look. Some Brazilian soybean production estimates are falling. StoneX was out yesterday with a 132.6 for Brazil. They were 133.9 previously. USDA is at 133 still. Now, if realized that StoneX estimate, even though it's lower, would still exceed last year's crop by 5.2%, and it would still be a record crop. And last year was a record at 126. The record crop, as I've discussed before, it has a lot to do with the big acreage increase rather than like excellent yields. I mean, the yields I think are going to be okay the way it looks now. Some early soybean harvest has actually started in Brazil, but it's going to be several weeks till they really get into the swing of things. The cattle market yesterday finished kind of like mixed. We tried to rally early. It set back. Feeder cattle ended the day with some gains, so it was not necessarily the worst action in the world. There was some cash trade, 109 to 110, I think, and that's I know there was some isolated cash trade at 105 early in the week, so I suppose that's an improvement. In the outside markets this morning, the S&P is up again. It's up 9 points. The Dow's up 60 points. We've got the gold up about $5 this morning. It was up yesterday. U.S. dollar's down a little bit, under a little bit of pressure. We've got to keep an eye on that dollar. If you were to take out those 2018 lows that I've discussed, I think that would be a positive for a lot of these commodity markets. In the energy markets, we have the crude oil up. Down 25 cents at 53.06 in the March WTI contract. Remember, everybody, if you would like some more information from me, go to my website. It is www.standardgrain.com. Click on Grain Marketing Plan here in the upper right-hand corner. For $49 a month, I will send you my morning email, which goes out every business day at 6:30 a.m. Central Time. I'll send you my text message service. The email basically includes every overnight headline that you need to be aware of. It includes all my grain marketing recommendations. My marketing recommendations are broken down by crop, year, and by percentage. You do not need to be a futures or options trader to participate in this stuff. You can cancel it at any time. There's no other fee, no other obligation, nothing like that. Everybody have a wonderful day today. I will talk to you a little bit later.